The stock market has been selling off heavily during the course of today. Funds are being rapidly moved away from risk assets, and as a result, my own personal investment portfolio is down round about 4 figures just today alone. So in light of this, I'm sure many of you guys are probably seeing a sea of red across your own investment portfolios too. So I thought I'd make a quick video to talk about what the is actually going on in the stock market today and give you guys a few of the key reasons, 5 key reasons in fact, on why the stock market has started selling off and may continue to do so for the coming weeks ahead as well. But before we dive into it, guys, for those of you who are new around here, my name's Mitch. I post all kinds of videos on investing and the stock market. If you do enjoy content like that, hit that big red subscribe button down below as well. Drop a like on the video, guys. Really helps out the channel. With that being said, let's dive straight into it. So first up, let's talk about the severity of the situation, because it does, on the surface of things, look pretty bad. It's been the worst day for stocks since October 2020, with the S&P 500 being down 2.19%, the Nasdaq being down 2.6%, and the Dow Jones being down 2.27%. All the major US indices are certainly taking a beating today, and the worst is possibly yet to come. Because the reality is we're only back trading at market prices which we last saw back in July, which was only a couple of months ago, and the market itself isn't even halfway towards seeing an actual formal market correction, which needs to be a 10% decline in stock market prices or more. So just be prepared, a deeper pullback could yet be on the horizon. But before you absolutely panic sell all of your holdings and look to sell out across your whole investment portfolio, let me just say this, guys, please do not panic. Yes, it can be a very scary time when the stock market and all of the major stocks are starting to sell off quite heavily. But for me personally, guys, I'm just going to use this as an opportunity to further cost average my way into some of my favorite stocks. I'm going to look to buy into those stocks at a discount, and I'm certainly going to look to hold on to them for the long term, because remember, guys, time in the market is the most important factor when it comes to investing success. So with the message of staying calm out the way, now let's talk about some of the key catalysts as to why the stock market and equity markets on the whole sold off today. So the first one was around investors fearing a contagion sweeping financial markets from the troubled China property market. Hong Kong equities saw a big sell-off during the Asian trading session today, with the benchmark Hang Seng Index plunging 4%, with embattled developer China Evergrande Group on the brink of default. Now, to provide you guys some context as to what all of this property stuff is about over in China and all of the issues are being experienced, well, one of the second biggest property developers over in China, called the Evergrande Group, are in about $300 billion worth of debt and have notified banks that they're actually going to look to struggle to pay off that debt, and in actual fact they may even default on it. Many are labeling it as the China Lehman Brothers moment, which is certainly a reference back to the financial crisis of 2008, where everybody was over leveraged, everybody was using a hell of a lot of debt, and we all know how that played out in the end. I think the big issue here being that it's resulted in a little bit of a domino effect in just investor sentiment on the whole. The reality is the problem, from my point of view anyway, looked to be a bit of a Chinese problem with the Chinese property market. And all of a sudden that seems to have had a bit of a domino effect into other equity markets all around the world. And now it's not just a Chinese problem, but it's a kind of global problem right now, with all of the stock markets selling off together. It's possibly just a bit of a reminder to investors of what certainly happens when you have too much debt and you can't pay that off when you face operational challenges, and perhaps it's a little bit of a reminder as to what happened back in the financial crisis of 2007 and 2008. Next up, the second stock market crash catalyst in which we've seen is that the Federal Reserve are beginning a 2-day meeting starting on Tuesday, and investors are worried about the central bank will signal it's ready to start pulling away monetary stimulus amid surging inflation and improvement in the job market. So inflation has certainly been a key topic of conversation for the Federal Reserve over the course of the past few weeks, last couple of months or so, with inflation readings being in the realms of about 5 to 6% per month. And in an attempt to curb this high level of inflation, the Fed are certainly looking towards tapering their quantitative easing programs, which is probably long overdue in my opinion anyway, with all of the money printing which has been going on, which may happen as early as November this year. And that's largely down to, as it says, the diminishing need, I guess, for stimulus packages as a result of the job market improving and just in general the US economy on the whole. But having said that, the only caveat to this is, well, point number 3, which is also another catalyst for a potential nervousness around the stock market and equity markets right now, which is unfortunately because of coronavirus cases, because of the Delta variant, remaining at January levels as colder weather approaches in North America. Of course, going into the colder winter months, there's obviously a little bit of fear and a little bit of nervousness around this, and the potential that a spike in case numbers could certainly happen, and as a result we could end up with a hell of a lot more restrictions coming back into play and national lockdowns and all that kind of stuff. And as a result, we certainly know the outcome of all of that. It certainly results in a hell of a lot of businesses struggling, the economy struggling altogether, and as a result it's likely that the stock market will sell off like we saw back in March of 2020. For me personally, guys, I don't believe this will happen, and I don't really believe that this will be a major catalyst for a further stock market sell-off. My rationale being that I do believe that we're now starting to see light at the end of the tunnel. Restrictions are being eased, and as long as we don't take an immediate U-turn on all of these restrictions being lifted, then I'm hopeful that the economy and global economies will continue to be able to get back up on their feet as a result of all of these restrictions being lifted and hopefully returning to somewhat life as normal. But you do certainly have to say that investors may be a little bit nervous about the potential that something could happen once again, and as a result it may cause another stock market correction. Fourth up, we have that September has the worst track record of any month throughout the course of the year, averaging a 0.4% decline for stocks, and history shows us that selling trends tend to pick up in the back half of the month. Now, I've made multiple videos on this. I made one this year to warn you guys of a potential September stock market sell-off, and I also made the same video last year to warn you guys of exactly the same thing. Now, last year we did see actually a pretty steep sell-off. It wasn't quite corrective territory. I don't think we sold off quite that 10% level. However, as of the current momentum in the stock market in which we're seeing right now, we're about halfway to that corrective territory mark, with the stock market selling off about 4.5% so far. So we're certainly well on our way to corrective territory, but just on the whole, it looks like it's going to be another red month for the month of September. Then finally, the fifth reason is that investors are also concerned about brinkmanship in DC as the deadline to raise the debt ceiling approaches. Congress returned to Washington from recess, rushing to pass funding bills to avoid a government shutdown. Again, it is another thing which I've briefly covered off on this channel before, and in essence, the US government are literally up to their eyeballs in debt, and if they don't raise the debt ceiling, then there is a possibility, and we've certainly been warned, that they may actually default on their national debt. Now, of course, this obviously naturally presents quite a lot of worries for a lot of US investors, because a default on national debt will have not just a hell of a lot of problems for the US government, but it will also have a hell of a lot of problems for the US stock market, the value of the United States dollar, and just the American people on the whole. So to be honest, I think it's probably just a formality that they'll just continue to raise the debt ceiling, but again, it's something to be a little bit concerned about nonetheless. To be fair, I don't think the US will ever pay off their $28 trillion worth of debt or something ridiculous, which they have. So to be honest, I think it's just a formality of the US for now, and it'll be something that continues to sit on the government's balance sheet from now until the end of time. So they are most certainly some of the core reasons as to why we've certainly seen a bit of a stock market sell-off over the course of today, and why it's likely that we may also see a bit more of a stock market sell-off over the course of the coming weeks ahead too. For me, guys, it will be an opportunity to look to cost average my way into some of my most favorite stocks, as I've already said. And in actual fact, guys, if it helps settle your mind somewhat, if you do want to see another Trading 212 investment portfolio update, be sure to let me know down in the comment section below. I'll show you my own investment portfolio, how it's performing, just how much it's sold off, and I'll also show you some of my live investments in which I'll be looking to make on that video as well. So with that said, guys, don't panic. Try to stay level-headed. Try not to make any rash investment decisions in which you may go on to regret. And with that said, guys, if you did enjoy the video, all I ask is that you do drop a like on it, as well subscribe to the channel if you're new around here. And with that being said, I'll see you over in the next video.